According to Graham Stephan, who I really like, 84% of the people out there right now think now is a terrible time to buy a home. Well, do I agree with them? Stick around, let's find out. Good afternoon. My name is Adam Kahn, and I'm the Rational Investor. Today is Tuesday, January 2nd. Happy New Year. I hope you're all doing well. A little bit gloomy and chilly here in Las Vegas. Um, for the most part, any time that 84% of the people think something in terms of the markets, I try to think the opposite. I try to go against the herd. But before I go into the reasons why, because I'll break it down for you guys. If you could do me a favor, if you haven't already, hit the subscribe button, also hit that like button. It really goes a long way in people finding the channel and helps YouTube's algorithm because it shows that the people watching are enjoying the content. So if you are, I really appreciate the support. It goes a long way. The other thing I'm going to do is I'm going to put a link in the description for opening an account at Sofi. Not only do I own stock in Sofi, I also opened an account there as well, so I use them. I think it's a good platform. They have a lot of things people can use. If you open an account and deposit $10 or more, they're going to give you a $25 gift for doing that. And then on top of it, the one that the link's attached to, I opened an account with my son who's 13 years old, gives us a small gift as well. Since he's 13, I try to teach him about investing and saving also. And when we get those gifts, it goes a long way because, I've said it before, being his dad, he doesn't always listen, but when he sees those gifts, he gets really excited and he pays a little bit better attention. Now, even if you don't open a SoFi account, I don't only talk about real estate, I talk about stocks and other things. I would urge you to maybe open an account somewhere if you haven't started saving and investing. I know it's really boring. I know nobody wants to deal with it and there are other bills to pay, but based on being a little bit older and going through life a bit, I'm 52 years old now. I'm really glad my parents pushed me on that because I find that I'm in a position where I'm not super stressed whether the economy slows down or not. But let's get into the video and why I think the housing market is still a really good opportunity. So they almost joke about the best time to buy a house is 30 years ago, and that the second best time to buy a house is now. I couldn't agree more. And the fact that 84% of the people think it's a terrible time to be buying a house makes me more adamant that it probably is a good time to be buying a house. Now, keep in mind, this is not financial advice. You guys really need to do your own research on what makes sense for you. You shouldn't be listening to me and making financial decisions based on it. This is just information for entertainment. Hopefully, you find the stuff that I talk about valuable and maybe it helps you think a bit. But you have to look at your own unique situation and make the decisions for what fits best for you. And then as a caveat, if you are buying a home, please don't overstretch because if I'm wrong, I always want to see people in a financial position where they can afford the things they're doing. I would hate to see somebody push too far. And even if I end up right, put themselves in a position that they really can't afford those bills and potentially lose their house. But with all the negative information out there, being credit cards that are over $1 trillion, inflation causing all sorts of problems, car defaults beginning to go up, as well as the housing foreclosure rates going higher. If you break all those down and look at them individually, they all make sense and they all should be doing that. For a long time, house prices were going up so quickly and the interest rate was so low, you weren't going to have a foreclosure. If somebody couldn't afford the payments, that was called selling their house. If you have 80 or 100,000 or even $30,000 worth of equity in the house, why would you foreclose on it? What you would do is find a realtor and sell it and take the money that you made and go do something else. So you weren't going to have a foreclosure rate. The fact is, the past year, that some places the housing market's fallen off a bit. It's down 5 or 10%. And that's about the best I think you're going to see. I think from here it actually goes higher. But this is the first time we've had a decline in prices. So if somebody is upside down, well, maybe they get foreclosed on. But for the past 5 years, where would there have been a situation where somebody would actually get foreclosed? Unless they just didn't understand the process and they fell behind on their bills and didn't sell the property. But my God, If you bought a house for $250,000 and it went up to $350,000, why would you be foreclosed on? It just doesn't make any sense. So the foreclosure rates went down to near zero. It's not this analysis that a lot of the doom and gloomers are doing where they think, oh my God, people weren't getting on foreclosed on, the economy was so great, and now all of a sudden they're foreclosures, so it's gone up 100% from where it was last year. Well, yeah, last year it was pretty much near zero. So if it was 0.3% and it's drifted up from zero point 0.3 to zero point 0.5, well, yeah, it's gone up 70, 80%, but that doesn't mean it's a problem. It's still super low in the history of what foreclosure rates should be. And defaults on cars, that doesn't really shock me one bit. During the pandemic, nobody had to work. They were giving out a lot of money through unemployment and other things. I I would guess if you didn't have to pay your rent and you didn't have to pay other things and you were getting free stimulus checks to pay bills, people might have gone out and bought cars that maybe they couldn't have afforded. Now that life is starting again and people have to pay their bills, they now have a new car payment that they shouldn't have taken on because they just had this extra money. Why would it be a surprise to anybody that default rates on autos are going up as well? That was really just a matter of time. And to be honest, I was kind of waiting for it because I was hoping that prices on autos would improve, and they kind of have. Now, if you go to CME.com, you can take a look at the Fed predictions, and they're pricing in 6 rate cuts for next year. The 10-year Treasury note has already dropped from 5% to under 4% in the past month and a half. Mortgage rates are likely going to improve. What I envision is this year, I'm so used to saying next year, forgive me, as the election starts coming along and rates improve and mortgage rates go lower, you're going to see a lot of buyers come out of the woodwork. And if we actually got into the 5% range for a mortgage, I think you see a lot of people come out of the woodwork. And I don't see where a lot of inventory is going to come to the markets to start driving the prices lower. What you need for a crash is unemployment and a bunch of panic sellers. Now, it is possible that could happen. So I don't want to say it's not going to happen. I just think it's pretty unlikely at this point. The Fed increased rates at the fastest pace they have ever. The economy still seems to be doing well. GDP is just fine. Unemployment hasn't gone through the roof, although it has begun to get a little bit higher. The Fed has seen this, and now they're reversing, saying, wow, we've done a really good job. Inflation has slowed down, growth has slowed down, and everybody who's upset and complaining online, they're upset about the same things I am. What we're all upset about is we can't afford the things we used to. Well, that was the exact goal. And as an example, and I think I said it in yesterday's video or the day before, my wife and I and our son, we used to go out minimum 2, 3 times a week. And some weeks we would go out 4 to go out to dinner, or we'd pick up lunch or whatever it was. To be fair, income was really good and the cost of going out was really cheap. That has changed. Income is more stretched. The cost of going out has gone up significantly. So we go out once every 2 or 3 weeks. We've made that adjustment. That's called a slowdown. I would like to complain. Yes, the grocery bills are more. Yes, things cost more. But what have we started doing? We start cutting coupons. We pay better attention to where to get good deals. We don't buy the things that are really expensive. I saw some woman on one of the channels complaining about she can't afford potato chips because they're $5 a bag, and she can't afford steak because it's gone up to $20 or so a pound or whatever it was. And as much as I feel bad because I actually agree with her on one level, on another level, they go on sale 4 bags for $8 very often if you want chips. And to be fair, we've kind of cut that stuff out because it got expensive. And steaks go on sale for $5.99 once in a while when you buy the bigger pack. And yes, you can get a decent one. You don't have to get select. As somebody who used to own a restaurant, and I'm super picky about the things we buy. But we wait for it to go on sale. We buy the bigger package. We have our dinner, and then we freeze the rest so that we can have it again later and get it at the price we're hoping to get it. Graham Stephan talks about coffee. I don't go out to Starbucks. I make my own coffee at home. Why? When I do the math, call me cheap, and we live very nicely. When I do the math, it costs me 20 cents, 30 cents at most to make myself a cup of coffee. Whereas if I go to Starbucks and have them make it for me, they're charging me $4 or $5 for the same thing I can make at home. And I can pick different brands and taste different flavors that I actually like better. Now, I feel badly about this, I really do. But I think that we're going to see housing to continue to get more unaffordable for people. I think rents might stay reasonable because I do think a lot of people got into properties at really good prices and really good rates that they're not going to want to give up, which is why I don't believe that if rates get back into the fives, this theory of all the people that have the lower interest rates are now going to list their properties for sale, and that's what's going to bring the inventory to the market. I really don't believe that. I think you might see a little come in, but if somebody's doing that, it's because they're buying another property. So if they're selling one and buying one, I don't see that being some big influx of inventory. And I think some of those people in that position will think, geez, I'm in it such a good deal. I can rent out my property and still afford to buy a new one because oftentimes people who saved up to buy the first one are really good savers who might be saving up and now they can afford to buy another one. So if it happens, what I see is more rentals coming to the market from the people who decide they want to keep their old home and still they're ready to move and upgrade or whatever it is that they have in their mind in terms of that move. And maybe rents don't go up as much, but I don't see a big influx of inventory to help drive the prices lower. I just don't see it. This Airbnb coming to the market myth, that's not going to do it either. Now, there is potential for the new bill that's coming up about forcing the corporations to sell if they have more. I want to say it's more than 500 homes or whatever the number was, that over 10 years they'll have to sell it at 10% increments. But again, when I look at the number of those homes, which sounds really big when people talk about it, but it's not that big in terms of the typical turnover of properties in the US. It's just a big number to an individual because it sounds like a lot of property, but it really isn't anything that's going to move the needle in terms of having enough inventory to drive prices lower. The other thing about that is these are investment companies, so they're not going to panic and just dump them on the market and drive prices lower. They're going to be very calculated about selling them. And my guess is they'd slowly get out and not push the market further, which was probably the concept of allowing them to only do 10% per year over the next 10 years. Now, that bill hasn't even passed. So I'm even saying if it even passed, I don't see that being what drives the needle. So unfortunately, I think we have changed and the prices of homes in certain areas are less affordable. The same way that the grocery bills are less affordable, the same way that tickets to a hockey game is less affordable or a concert, or all the things in life that have gotten less affordable, including home insurance, car insurance, gas bills, electric bills, and everything. Housing is all a part of everything as well. I don't see a scenario where housing is just going to improve. Everybody's going to still be employed, making better money than they used to. And it just like, I would love it too if it just miraculously became better priced. So I think you have to decide like, do I want to try to save to buy a home? And I would stay in budget, don't overstretch. Or do I want to accept renting and invest in other things? But I think the key is to save and try to invest, even if that means staying at home with your parents longer than you expected. I mean, my God, my son is welcome to stay here as long as he needs in order to try to save and get ahead. Or having roommates, or whatever those things that you need to do to put yourself in a better position. But I picture come March, April, or May here in Las Vegas, we're going to have bidding wars again. Now, I might be wrong. Again, you have to make those own decisions for yourself. I'm just telling you what I think. But I think we're going to have lower rates. I don't think we're going to have a whole lot more inventory, and the lower rates are going to draw people in the market. The interesting thing about that, if housing prices go up, that shouldn't impact CPI, especially if rent rates stay low, which does impact CPI. So you could see a situation where housing gets more unaffordable to own, but rents stay low and CPI continues to drift lower. The other thing is oil prices have come down despite today where they were up. And gas prices. I can't believe some of the stuff I saw. We drove out to Utah for the holidays. We went to Bryan Head so we could go play in the snow. I saw under $3 at a couple places. And here in Las Vegas, they were getting into the threes when they were pushing the fives before. That's all part of CPI. So when the Fed's looking at those numbers, and to them, inflation is slowing down, even though a lot of people don't really feel that way, well, that allows them to ease off, start cutting rates. They even announced about, I think they said selling less bonds to like, I just picture the economy doing well. I did picture the stock market having a pullback. It had such a run up at the end of the year. I I don't know if today was it. I kind of think it'll have to be a big enough pullback to scare people to think the economy's bad. But I think what's really gone on is most people have been chased out of markets. I don't hear them talking about crypto anymore. I don't hear them talking about the stock market anymore or housing. I think they talk about how bad it is and how you can get a CD that paid 5% or a high yield savings account or a treasury bill. When people are scared out of the markets, my guess is, along with the 84% that think it's a really bad time to buy, they've made a mistake. They've all taken their money out of risk assets and potentially make your own decisions. The risk assets start going up again while they're getting their guaranteed return. And they sit there watching all these things as they start to make new highs, getting really upset that they're locked into these guaranteed low returns, even though they're higher than where rates will be. Well, when those mature and they roll out of their 2 year CD in another year and a half and think, geez, now they're only at 3%. Do I want to now put it back in the stock market after it's gone higher? Or do I want to roll into a new CD at a lower rate than what I was getting before? I'm guessing that you're going to see some of that money start coming back to the markets, whether it's housing or stocks or whatever. Keep in mind, as rates go lower, your return on investment, if you're buying a house, should calculate that all in as well. Maybe you don't need a 6% cap rate. All of a sudden, you're back down to a 5 or a 4 because I can only make 2 or 3%. So I just don't see 2008 again. I don't see a big calamity of a bunch of people selling that drives a ton of inventory and a banking crisis. I think we've been through it and we've learned. My only concern is the debt, because where my head starts spinning is when the debt gets so much that it's bigger than our GDP, then what? Now, the thing is, it seems like every other country is running into the same problem. So part of me just thinks it's just part of the world. The same way I grew up in New York and there used to be on one of the buildings just this thing going in circles and circles and circles that was the national debt. And I remember my parents talking about it and telling me how terrible it was. And I'm guessing if it was what it was back then, they could pay it off in an hour versus where it is now. Either way, I think the economy is doing better than people think. When I go out, there's sure a lot of people in lines at restaurants and all sorts of things that I'm floored because I hear how slow the economy is. You couldn't even drive past Chinatown on Christmas and New Year's because it was so crowded. So, anyway, I hope your new year went great. I want to thank you all again. I'm so excited to see how the channel's been doing. And don't forget, hit that subscribe button and like button. Make comments. I love the comments. It gets me really excited when people actually say something. Even when you disagree, it's okay. It's totally cool by me. I like the conversations. So have a great day. Happy New Year again.